Good evening, everyone. Welcome to Patron Live Sharing Class. So once again, it's my greatest honor to be able to host everyone here. I hope we all can pick up some new knowledge from my sharing and to be able to fully understand the materials I have prepared for this evening. Also, please take some time to review it again if you have any concerns. Remember to apply the knowledge you learn into practice. Continuous learning and practice will definitely improve your trading skills, which will eventually lead to more profitable trades. Financial freedom is our ultimate goal here. So let's work hard together to achieve it. Today, there's a new topic we'll be sharing. It's stock price morphology. Contents I picked to share with all of you is something I believe is useful and important for most of our listeners. This technique will be able to help everyone here to have a clear understanding on how to read the charts. As for my duty here, it's not only sharing trading techniques, but also to scan for more profitable, high quality stocks, share market analysts, and guide everyone in all aspects of trading. So, I hope that in the year 2024, everyone can be more skilled and profitable. Thank you for everyone's support. Okay, friends, let's take a look at today's content. Today we have 4 topics to go over. I also will go over on IPO with everyone. Okay, let's move on to the stock market situations. Okay, for today's market review and analysis, the Indian stock market opens significantly higher amidst a global rebound and started off strong. However, it eventually closed lower due to selling pressure in the banking sector. The current trend has shifted from being strong to not so strong, and the expected adjustment has been disrupted, resulting in both major indices being in a state of high level volatility. Okay, let's take a look at the Nifty chart for today. Today, the Nifty index opened higher with a gap up and proceeded to trade in a narrow range. This marks the 3rd consecutive trading day with gains for the stock's benchmark of Nifty 50 and Sensex. Although the increase might not be very significant, investors remain cautious ahead of the important financial reports from IT giants, which is TCS and Infosys, later in the day. They also felt some nervousness due to the upcoming release of US inflation data, which could impact interest rate decisions. Overall, the global situation seems positive ahead of the expected US inflation data released later in the day. According to Reuters survey, the core CPI is expected to remain unchanged from the previous month of 0.3%, while the year-on-year inflation rate is forecast to slow down from 4% in November to 3.8% in December. From a technical perspective, although the upward channel remains strong, it's more apparently that the price are developing sideways towards the higher level, while the trend still favors the bulls. A significant catalyst is needed for a breakout to the upside in the short term. The current technical support is in the range of 21,400 to 21,500. Okay, that's all for Nifty 50. Let's move on to Sensex. Okay, as for Sensex, similarly, the index is also in an upward channel, but overall it seems to be slightly weaker than the Nifty index. On the previous trading day, the index had broken below the lower support of the channel, but eventually closed above the channel line. So, as for now, the upward channel still remains strong. Since the Sensex index and Nifty index have similar trend, and the Nifty index is slightly stronger, as long as the upward channel of the Nifty index remains strong, then Sensex should be fine. Even if there is a break below the support line during trading, from the China perspective, it is evidence that both indices have received support. Apparently, now is the opportunity to buy some high quality stocks on dips. And of course, provided that one does not chase high price. Okay, that's it for the indices analysis. Let's move on to the next topic about micro analysis. Okay, let's continue with the news and data. Okay, understanding how investors interpret news and data is crucial when it comes to investing. Different people may have different perspective on the same information or news. As for investors, can discover long-term investment opportunities and recognize long-term trends in the economy and industries by analyzing macroeconomical fundamentals. In this way, we need to consider the macroeconomic aspects in addition to equities themselves throughout our regular trading process. Let's take a look what news I have prepared for everyone. Okay, for Fitch Rating, Chief Economist Brian Carlton stated in a webinar on Wednesday that due to strong signs of economic growth, the credit rating agency Fitch will no longer predict a recession for the United States this year. He mentioned that the Federal Reserve may cut interest rate 3 times in 2024. This statement is mainly because Fitch downgraded the highest credit rating of the US government from AAA to AA+ last year, citing fiscal downturn and repeated debt ceiling negotiation threatening the government's ability to pay its bill. What does this indicate? It indicates that between the two ratings by Fitch, there has been a fundamental change in various comprehensive data in the United States. Although we have not seen an official report yet, the chief economist's remarks are not unfounded. And indeed, various economic data in the US have been developing positively recently. As for the differences in the two viewpoints, it's mainly because economic conditions and forecasts may change over time, and rating agencies will update their assessment based on new data and circumstances. Since Fitch chief economist has released the interest rate cut forecast for 2024, this may reflect their view of the future trend of the US economy. Forecasts are usually based on current and expected economical data, policy trends, and other relevant factors. They do not come up from thin air. We have always been concerned about the data or interest rate cuts in the United States, mainly because once the Federal Reserve cuts interest rate, it is a great benefit for the global stock market. And this will apply the same for Indian stock market. Okay, that's all for this news. Let's take a look at the next news. The Indian Finance Minister Nirmala Sitharaman stated that achieving a 30 trillion economy for India by 2047 is a conservative estimate. And she believed that the state of Gujarat is a key driver of growth in India's path to become a developed nation. By 2027 to 2028, I believe we will definitely achieve the respected Prime Minister confidently mentioned third major economic milestone. Therefore, it is possible by 2027 to 2028, we will be the third largest economy, with our GDP surpassing $5 trillion. Sitharaman said that at the Rainbow Gujarat Global Summit on 10th of January. She added, as I said before, by 2047, our economy size will conservatively reach at least $30 trillion. The finance minister also commented on the nation economy, stating that India is now becoming an internal producer of semiconductors, and that electric vehicles will also be adopted on a large scale. Furthermore, she pointed out that despite disruption, such as rising US interest rate, foreign direct investments continues to flow into India. The finance minister, speaking at the Vibrant Gujarat Global Summit, also highlighted that the partnership between the central government and the states will be crucial for India to become a developed nation by 2047 through inclusive and empowering growth for all citizens. India is currently in a phase of strong economic development, and in this historical process holds immense significance. It is crucial for all historical participants to truly seize the benefits of the times. And for stock market participants, it is even more important to strive forward and earn more profits. So, from this news, even the finance minister of India also think that we as stock market participants should grab hold onto this opportunity to earn as much profit as possible. So, let me ask everyone a question. If this is not the time, then when will be the time? I will let everyone to think about it on your own. Okay? While we move on to the next topic. Okay, next topic will be IPO. Everyone is very interested in the IPO subscription in the market. So, and it's understandable that everyone knows about winning the IPO subscription often means profits. In response to everyone's request, today I will talk about specific information about IPOs and what IPOs can bring to us. In the past years, the number of IPOs in India market has reached the top globally. This not only facilitates more companies fundraising, but also brings more investment profits opportunities for market investors. Okay, let's take a look at the IPO informations. Okay, in 2023, India ranked first in the world in terms of number of initial public offering, which is IPO, for the first time. Okay, making it a standout compared to other largest economies with lackluster growth. Despite global uncertainty and a downturn in the market due to the Israel and Hamas conflicts, the financing frenzy in 2023 was exceptional hot. So in 2023, Indian companies collectively carry out nearly 240 public offerings. Okay, according to a report, Ernst & Young, in 2023, India has become the country with the highest number of IPO globally. The report also shows that in the third quarter of 2023, the primary market in India launched 21 IPOs, a sharp contrast to the 4 IPOs in the same period of 2022. The fundraise in the third quarter of 2023 reached $1.77 billion, a 376% increase from $372 million in the third quarter of 2022. Due to the enthusiasm of the capital market, before and after the Indian general election, strong economic activity, and the positive sentiments of domestic and foreign investors towards India, IPO activity has surged. It is expected that this momentum will continue for a long time, at least until the latter half of 2024. Okay, let's move on. What is IPO? I believe that friends are familiar with the word IPO and are very concerned about what exactly IPO is and why do all investors care about IPO. So first of all, let's take a look what is IPO exactly. The IPO process is the procedure by which a private company first offers its stock to the public. In simple terms, it means that when a company decided to transit from a private enterprise to a publicly traded entity. During the IPO process, the company sells newly issued shares or existing shares to investors at the offering price set by the company and the IPO's underwriters. After an IPO is completed, the stock will be listed on the stock market, such as the Bombay Stock Exchange, BSE, or the National Stock Exchange, NSE, which is in India. This listing allows the stock to be freely traded among investors in the secondary market. Okay? Okay, the enthusiasm for IPO subscription is very high, and many people are keen to participate. Why is that so? It's actually very simple. People participate in IPO subscription is to reap higher profits and returns. If the subscriptions for new shares is successful, meaning obtaining the new shares, okay, you can earn more profits on the first trading day of the listing, even up to around 200% or even more, which is basically equivalent to risk-free trading. Currently, and for a long time to come, subscribing for new shares is almost without any risk. Yet the potential returns could be substantial. Okay, let's take a look at the statistics, okay, for the IPO. According to data statistics, in 2023, there were 18 stocks that gained over 100% on their first day of trading, with some IPO listed company achieving over 200% or close to 200% returns. This is one of the most important reasons why people are actively participating in IPO subscription. Because as long as you are located shares, the returns far exceeded the profits of a regular stock trading. Just think about it. How long will it take to achieve 100% profit using a regular account for stock trading? Not to mention to achieve 200% or more of profits. Okay? Let's take a look at one of the performance of the stock that was launched on the IPO day. Okay, Goya Salt. On the day of its IPO, okay, the issue price of the stock was 38 rupees. And the closing price on the first day of trading was 136.1 rupees. With an opening price of 130 rupees. This represents a staggering profit of 258.2% of profit. In other words, if you had invested 100 rupees in this stock at the point of time of its IPO, you would have made a profit of 258.2 rupees. Result in return of investment is 258.2%. This is an impressive figure and is likely a key factor driving active participation in IPO subscription. If you were to trade in ordinary stocks, how long it will take to make a profit of 258.2%? In contrast, by participating in the IPO subscription and being allocated shares, it will only take a few days to achieve the same result of 258.2% of profits. Of course, not every share can achieve such profits on the day of its IPO. Okay, some might be only 100%, or maybe 80%, or even 150%. But the profit margin is very high. We won't go into more specific IPO performance statistics today. I believe one will be good enough, okay? But we will have the opportunity to discuss in details, okay, in the future. So let's move on to the next one, okay? Okay. Since the IPO application was successful, does it only have advantage and no disadvantages? The answer is no. The difficult part is that many investors often persist in applying for IPO for years without success, meaning they cannot enjoy the profits brought by winning the IPO applications. As I mentioned before, my team and I has been spending a lot of time and effort recently to research on companies that are about to go public and negotiate a portion of the underwriting quota. We have made some progress. Apart from Additive Learning Technology Limited IPO, which is scheduled on the subscription on January 19, we have also secured a small portion of the underwriting quota for the upcoming MediAssist Healthcare IPO and Max Posture IPO. which are set to open for subscription on the 15th. This is a great news as these two companies has been extensively researched and studied by me and my team. And it's highly that they will yield a 70 to 80% in returns, okay, in the early stage of listing, at least 70 to 80%. So if you are able to win the IPO application and the companies go public, you and your friends can also profit, and our asset management skill will correspondingly increase. Regarding these two upcoming IPOs, we have already negotiated the underwriting quota with relevant institutions and obtained a small portion of it. Okay. As a foreign institution, our foreign asset management accounts have unique advantages when participating in new stocks IPO applications. And I will share more about this at a later time. For those friends who want to participate in this new stock IPO application, please, you can contact my assistant for more information. Please also pay attention to the content shared in the group and each live class at all time. As for today, we will only talk about IPO subscription. Next, I will continue with the technical sharing contents for this evening. Okay, let's move on. Okay, what I want to share with you today are advanced practical skills in stock price patterns. Due to the extensive contents involved in the stock price patterns, I can only share part of it with everyone this evening. I will schedule further sharing for the remaining contents at a later time. Okay? Okay, just a bit of history. In 1948, the father of technical analyst, John Magee, published the classic work Technical Analysis of Stock Trend. Based on his over 30 years of practical experience in stock market, he organized and classified stock price patterns, detailed the appearance and the application of various patterns. And the parallel lines are one of the topics discussed in his book. The importance of parallel lines is evident. I believe that learning stock price patterns analysis can enable operators to have a better understanding and predictive ability of the major trends in stock prices through the recognition of major patterns. Parallel lines are the basis for entering the study of stock prices patterns and are worth studying and researching. So let's move on and see what is the next slide. Okay, for channel lines, okay, what is channel lines? In fact, everyone is not unfamiliar with this aspect of contents. Recently, I have often used channel lines for index analysis. I believe everyone should actually can remember about it clearly. So what is channel lines? Okay, the price movement within two parallel lines, like a channel, okay, in a channel, is called channel line, connecting the high points and the low points of the stock price wave. If the upper and lower trend lines form a channel, it belongs to a channel line pattern. The trend of the channel line can be developed into three types of according to the direction of the channel line. 1. Upward channel line. Okay, the channel line moves upwards. 2. Downward channel line. The channel line move downwards. And 3. Horizontal channel line. The channel line move horizontally. In definitions, the channel line is not a complex pattern. The only thing to pay special attention to is in drawing the channel line is to connect along the edge of the trading congestion area. And the upper and lower shadows can be ignored. Okay? Moreover, everyone needs to practice and exercise more to use the channel lines technique well. Okay, let's move on and take a look how to use it. Okay, when it comes to 3 types of trend direction, okay, of the channel lines, it's actually quite simple. Okay, please all take a look at the diagram. Okay, the diagram shows the 3 different kind of channel lines. Okay, for number 1, which is in green, okay, for this is a upward trending channel lines. The price trend is climbing upwards, and the channel lines are moving to the upper right. The appearance of this type of channel lines indicates that the price is in a phase of upward trend. Okay, for number 2, okay, which is the yellow one, horizontal channel lines. The price direction is horizontal, and the channel lines move sideways. In fact, we often describe this type of channel line as a rectangular oscillation. Okay, as for rectangular oscillation, I believe everyone could remember the content that I just shared with everyone earlier on my previous lesson. So, when it comes to a technical analysis, as long as everyone can study it carefully, it's actually quite simple. Okay, now let's take a look at the third type, which is a descending channel line, which is marked in red. Okay, the direction of this type of channel line is moving to a lower right, and the appearance of this channel line indicates the price is in a phase of downward trend. Okay, as I just now talked about John Magee, okay, the father of technical analyst John Magee classified channels lines in a rectangular pattern in his classic 1948 book, okay, called Technical Analysis of Stock Trends. He believed that rectangulars are often horizontal, but can also appear sloping upwards or downwards. They may represent a continuation pattern or reversal pattern. A continuation pattern refers to a trend continuing in the same direction after the patterns appear. For example, an ascending flag pattern appeared during an upward trend. A reversal pattern, on the other hand, indicates a trend reversal after a patterns appear. The most famous example are the head and shoulders pattern, and a reverse trend from rise to fall, and the W bottom pattern for a reversal from a downtrend to an uptrend. After explaining the different type of channel lines, then the next question is how to use it. Okay, on next slide I will show you and explain to everyone how to use it. So, how do we use channel lines? Okay, first, we know that channel lines is a variation of uptrend line and downtrend line, and therefore has some characteristic of trend line and the neckline. As for the uptrend line and the downtrend, We will share details later. For today, we will skip that first. Okay. First, let's take the first usage. There is counter trend trading. Okay, within the channel line. When the price does not fall below or break through the channel line, it is considered as a consolidation within the channel line. Buy stock when the price fall below the channel line and exit the price, okay, rises above the upper channel line. The best entry point is to buy below the rising channel, thus gaining a dual advantage in range and short-term trading. Okay, let's study a graph for a clearer understanding. Okay, when it comes to the method that just mentioned, okay, let's take a look at a graph example. As shown in the figure, as long as the stock price maintains within the channel for a long period of time, we can buy in at the low edge of the rising channel and exit when the stock price reaches the upper edge of the rising channel. By repeating this operation, means this kind of trades, the profits obtained from a trend market are quite substantial, much higher than holding position unchanged. Okay? It is also important to take note that this discussion pertains to an ideal state, but in actual trading, it is impossible to capture all buying and selling positions. Everyone can learn the principle first, okay, and practice through your own practical trading. Then you summarize your own experience or unique method in order to overcome the majority of the opponents in the market and make a profit out of it. Okay? Okay, when it comes to using the channel lines, let's take a look at the second usage, which is called the effective breakthrough or breakdown of the channel line, which actually means the outward breakthrough or breakdown, a downward breakthrough of a channel line. Firstly, when the stock price effectively breaks through the channel and move outwards, it is advisable to buy the stock in line with the trend. Okay. Secondly, once the price effectively breaks through the channel and moves downwards, it is time to sell. Okay. For the most important point here is that what is considered an effective outward breakthrough, or what is an effective downward breakthrough. Generally, we measure or judge it from a perspective of price fluctuation, amplitude, and breakthrough time. Amplitude refers to the price breaking through the key price level more than 3%. The price level mentioned here is generally the channel line. As for the time basis, it's best if the closing price is above the channel line for 2 consecutive trading days or below the key level. Have you guys noticed the use of closing price? This is what we have learned in Dow theory, if you guys do remember. Therefore, for the content we have learned, it is necessary to review it regularly in order to have a deeper understanding. Let's take a look at the next graph with a slide. Okay, the next slide with a graph for better understanding. Okay, as shown in the figure, please pay attention to this graph. Okay, this graph, after the stock price has been running within a great, gently rising channel for a long time. Okay, from here to here, the stock price starts to break through with a large volume and then continue to run and consolidate above the channel. In the following long period of time, the stock price will continue to run within the newly generated upward channel. But the pace of the upward trend changes, the rate accelerates, and inflation increase, and the upward momentum is greater. When the price breaks through the first channel upwards, it is actually the time to enter to buy the stock. Okay, which is around here. Okay. Okay, next we'll be talking about stock box trading method. The origin of the stock box trading method, a strategy to effectively break through the edge of the channel line and go along with the trend. It seems simple but powerful when you execute it well. So let me share with everyone a real life story. Okay. In the late 1950s, this strategy created by a legend stock operator. His name is Nicholas Darvas. Okay. Darvas was originally a complete outsider to stock market. He was an international professional dancer who began to buy and sell stocks by chance. Initially, he had wins and losses, but after many setbacks, he finally realized the box theory of stock trading, which led him to make a lot of money. Darvas toured the world for years. In an era where there is no internet, relying on telegraph communications and brokers with several lagging time to trade messages. This allowed him to figure out the box theory of stock trading. And within 18 months, he rolled $10,000 into a remarkable profit of $2 million. Time magazine featured a special article in its business column at the end of May 1959. Darvas later wrote a famous book. The book name is How I Make $2 Million in the Stock Market, detailing his fascinating process and journey, which is definitely worth reading. As for myself, I will highly recommend everyone to read this book on your free time. Then you will understand how he made so much money in 18 months. Okay? The process. Okay, let's move on. As shown in the diagram, we can clearly see that many stock prices continuously form boxes pattern during their movement. Okay, you can see from this graph, there's one box here, and so on and so forth. Total of 4 boxes. Whether in an upward trend or a downward trend, a trend is also formed by countless box patterns, which validates the feasibility of the stock box method. I have only provided an example of an outward box here, and we will not discuss about the downwards box. Okay. For the next slide, okay, there are several key points about stock box trading. Okay, total there's 5. Number 1, basic principles. The top of the stock box is the resistance, and for the bottom will be the support. Okay, for number 2, changes in trading volume. When the previously calm stock and experienced a significant increase in trading volume, it's worth noting as it's like a calm lady dancing on the table, and it's a good time to buy when there's a significant breakthrough above the edge of the box. For point number 3, enter the market when the trend is established. Most of the time, stock price move within the box. Stocks with a trend will break through and jump to another stock box. The best buying point is at the breakthrough of the second or third box. Okay, for point number 4, hold on until the trend changes. Okay, meaning that hold firmly unless the stock price effectively falls below the support of the stock box. And for point number 5, exit without emotions. Meaning that when the stock price falls from the top of one stock box to the bottom and descends to the next lower stock box, that means sell without hesitation. Okay? Okay. Next, we will use a practical chart to share with everyone as shown in the figures. Okay. The third box, okay, which I marked, okay, which is over here. The third box starts to break through with increased volume, which is the best time to buy or add positions. We generally intervene with small portion size every 2 boxes. So the breakthrough of each subsequent box is an opportunity to add positions. Of course, this is not an endless process of adding position. There must be rules to follow. When the stock price falls from the upper box to the lower one, we should exit with all profits, regardless of the trading mode. What matters is what has been validated by the market and can bring us long-term positive returns. Our job is to execute it. If there are problems with execution, no one can help you. And you have to keep changing yourself. So, we have come to the end of my sharing class for today. Thank you very much for joining my class and giving me your full support. We will continue our live class on this coming Sunday, 14 January 2024 at 8 p.m. And I hope to see everyone here again. Thank you once again and have a great night.